So today I'm going to talk about three stocks that I think you guys could hit it out of the ballpark with. So if you're interested in some high possible return type of stocks, stick around for the video and I'll tell you why I love these companies. Good morning. My name is Adam Kahn and I'm the Rational Investor. Today is Friday, November 17th. Happy Friday to those of you who have weekends. For the most part, it doesn't make a whole lot of difference to me other than the markets aren't open. So I end up doing other things to keep my mind busy. Um, Before I forget, and before I get into the three companies that I think could crush it, do me a favor. If you haven't already, hit the subscribe button, smash the like button. By all means, make comments. Tell me the companies that you think could kill it. Normally, I talk about dividend stocks. I'm super conservative. I tend not to talk about the ones that I think could really hit it out of the ballpark. But today, I really wanted to share a couple of stocks that I think could do incredibly well over the next 2 to 5 years. Um, I'm also going to put a couple links in the description for opening an account at SoFi if you like. I use them myself. I think they're a great company. The links are connected to an account that I open with my son. He's 13 years old, and I like to encourage him to learn about this stuff as well. And I love the kindness and the support, so I think it's super cool when people use it. And if you put in $10 or more, they're going to give you an additional $25 for free. And who doesn't really like free money? Like, you know, why wouldn't you want to do it? But that being said, it also gives us a small gift. So he gets really excited and encourages him to learn about saving and investing as well. So stick around. I'm going to talk about these three companies and tell you why I love them. So the first stock in my list that could crush it out of the ballpark is Foot Locker, right? Who would have thought of Foot Locker and why? Well, I'm going to tell you the real reason I picked it is their CEO, who's been in there for about a year or so. Her name's Mary Dillon, and before going to Foot Locker, she worked for Ulta Beauty as their CEO. She managed to triple their sales and their earnings, and she really crushed it out of the ballpark for Ulta Beauty, and she's great at her job, and it's kind of like betting on the horse. It's not so much that I saw anything in Foot Locker. The added bonus that I like is they give a nice dividend. So as long as the company is making enough to continue to pay that dividend, me as a dividend junkie, I totally like it. Well, if she can repeat what she did at Foot Locker, Ulta Beauty for Foot Locker, I'm excited. I think the company could triple, quadruple, and even do more so over the next 2 to 5 years. I'm really hoping to hit it out of the ballpark. Now, keep in mind, I am not a financial planner. You guys need to do your own research on this stuff and decide what makes sense for you in terms of investing. Don't listen to me. I'm just some guy on YouTube. Like, really, I'm just some idiot sharing my information, and I'm comfortable with the risk I take. I don't want people taking on risks that they shouldn't because I do it. I'm in a position where I've invested since I was, 20, 25 years old, and I'm super comfortable with the choices I make, but sometimes they're wrong and then you could lose the money you put in. So I don't want you to do, especially these, because they're a little bit higher risk, higher return type of investments in my mind. Foot Locker's a decent company, but really it's about the CEO and her ability. Um, she worked at McDonald's as the chief marketing director for a long time. Then she was the CEO of a telecom company before going to Ulta Beauty. And from what I've seen, she's done well in every role. And my understanding of when she went to Foot Locker is she wanted to work for Foot Locker. I don't know that she was looking to work again. I don't know that it was what she wanted to do, but she really targeted them. So I feel like she must have seen something in the company that she thought she could actually increase their sales and grow the business. So I'm super excited to have her there, and I made a rather large bet in my mind in the hopes that she can do what she said. Especially because, like I said, I like the fact that it pays a nice, good dividend return as well. Because my attitude is, if it limps along anyway and I can get the dividend, that's just fine. And for full disclosure, I bought it significantly higher than where it is. I bought it about a year ago in the low 30s, high 20s, and it fell down to 18 or so. I'm comfortable with the trade. I'm comfortable to hold it for the long term. I'm hoping over the somewhere between the next 2 to 5, 10 years is where I can see the growth, and I plan to give it that time no matter what the stock does. So let's get on to the next one. So number two in my list was the one I have the toughest time deciding between. I was trying to come up with something else, and if you wait to the end, three is probably my favorite of all of them. But number two that I picked was Rivian. And the reason I like Rivian is I think that electric vehicles are here to stay. And not just that, I think that Rivian is in a space that everybody else is kind of getting out of right now, other than Tesla. Tesla's coming out with the Cybertruck, but Ford and the others are finding the electric vehicles too expensive and they're taking losses on them, so they're backing off of it. I'm finally seeing Rivians on the road. They're beating every time they report earnings, which is super exciting. And on top of that, like they're the cool car right now. Like it turns heads. It's what everybody's interested in. And as the others start getting out of the truck space, I just think that gives them more opportunity to continue to grow in that space and build a good reputation. The other thing that I really love is, like Tesla, they're direct to consumer. I haven't figured out what Ford and GM and Stellantis are going to do as time goes on with the dealerships. I think that puts them at a real disadvantage. This new generation of car companies, their ability to go straight from the company to the customer is is huge. And then they have control over repairs and everything else on top of it, but they don't have to worry about that extra layer of hands in the pot. So like if I'm Ford and I sell the car to a person who then sells it to the consumer, that person has all of those expenses and everything else, and it's a big layer of expense that if I'm Rivian, and I'm guessing VinFast and Tesla, and I'm wondering if Polestar, which is a division of Volvo, from what I understand. But I think all of them are just the companies selling directly to us. They don't have to go through the distributorships the same way. That's a ton of savings, which is why Tesla has the margins that they have. And I'm confident that so does Lucid and so does Rivian in this example. And when I look at Rivian's market cap in comparison to Tesla, which I know is a little unfair because Tesla blows everyone away, but I think Rivian is really inexpensive in terms of a market cap. Not in terms of PE ratio or anything else, but what I think they can actually be as a value to the company. I think we could see 5x or so in really a reasonable amount of time. And what I thought was super interesting is their earnings came out really good this quarter. And at first the stock took off, but it's pulled back significantly down to $16. I think that's a great area to be picking it up because I think the initial reaction where the stock took off on the earnings is the right one. I think it was really optimistic earnings that they had. And number three, and my favorite, which I'll start telling you a little bit about my background first, which will take even longer to get into the stock and why I like it. So, for those of you who haven't watched a bunch of the videos, before I moved out to Vegas and everything else, I was a commodities trader on the floor of the exchange in Chicago. I was super fortunate, really young. I knew I wanted to be in finance. I didn't know what I really wanted to do. I didn't want to go be a stockbroker. Like, I knew that because I did an internship for, I won't say which company because I don't want to badmouth them, and there's really nothing wrong with them because it's probably all of them. But when I did the internship for this stock company or this brokerage firm, what I learned is the stockbrokers just get these memos on their desk of stocks that they need to call their clients and sell to them. They really weren't doing a whole ton of research on their own. They weren't getting to trade. I didn't feel like they were giving the advice that they came up with, and I found all of that so interesting when I saw that they just get a memo to go sell. At the time it was like AT&T or this or the other, and they would call everybody up and start telling them to buy it simply because the company told them to buy it. I really got not thrilled at that idea. Well, when I graduated college, my brother was working at the Chicago Mercantile Exchange, which said to me, like, this is totally something you would love. So I went out and it was. I mean, I fell in love with it the minute I did it. And I was extremely fortunate, really young. It kind of jaded me afterwards because then when things changed, which is why I like this next company I'm going to get to, I watched it slowly change where computers took over and the trading disappeared. And it was very hard for me to move on because I wasn't realistic about what somebody would make at a normal job. Now, I was fortunate enough that I didn't really have to worry about it so much, and it's what has allowed me to do what I've done, which is primarily investing. But You know, also I got into mortgages, but I did that because my wife pushed me because I wasn't working and I gained a lot of weight and got out of shape and did things because, it just made me lazy. Well, part of why I like this next company is I see going on in the mortgage world what I saw going on the trading floor and fought for a long time. Computers eventually took over, and now trading is online, and the floor doesn't really exist. Myself and the other traders all thought, oh, no, 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 that'll never happen. They'll always need the floor. Well, I think you're going to see over time, this is not going to be very quick, but the lawsuit at NAR for the real estate and mortgage business is probably the first step in the direction of seeing things really change in this industry. I think it's a good 5 years out, but the company I love right now is Zillow. Now, again, you guys need to do your own research. This is not any research on their company. It's more a fact that I know that's where the volume of clients go right now. And what I watched on the trading floor and what I think is going to happen in the real estate business and in the mortgage world is eventually they're going to have something similar to what I would call Zillow Direct if I were working there and trying to do it. My thought is if I'm Zillow or if I'm Redfin or one of them, why wouldn't I start reaching out to the clients directly and starting to work deal with the clients who have a house and getting them to list with me, not go through the normal channels, and only charge a much smaller percentage, maybe 2% for both the seller's agent and the buyer's agent. I'd require them to get an appraisal up front and an inspection. I'd have them do the repairs that were major on the inspection and anything else, and I would have that all readily available to set a fixed price of where I would list the home. There'd be no negotiating from the buyer, there'd be nothing else. And the buyer would have access to both the appraisal and the inspection report when they go view the home. I then have my own agents on hand that could open the house and show them the home and help with the paperwork, as well as my own title company, as well as do the lending in house to really save the consumer a lot of money. I know today it is really hard to picture that, but I think as time goes on and things evolve and people start getting more comfortable with that you'll see the industry change. Now, out of selfishness, in some ways, I hope I'm wrong, but I am old enough that it's not really going to impact me a whole ton. And I just think you have to be honest about what we see going on. I think that lawsuit on its own is going to take 2, 3, 4 years to work itself out. But as it does, you're going to see some new players in the space. And the reason they'll be able to lower those charges is because they'll have an actual percentage of the real estate market. They'll be fighting for market share. It's not going to just be individual agents who list a few homes and make a little bit of money on each home. If Zillow's able to capture 30 or 40% of the real estate market, they just won't need the same margins that an individual person living in a specific state in a specific city showing some homes would need. And then they'd be able to incentivize young college kids or whomever it is to just answer the phones and show houses versus people who've made a career out of it and really demand higher salaries because they've earned it. There's some excellent realtors in the industry and they help to hold things together and they're really good with their clients. But I also think, just like we thought on the trading floor, in time people are going to want to save those commissions and there'll be a way to mitigate it with the technology. And I think you're just going to end up not wanting to fight it. I could be wrong on it, but I think Zillow's a great shot to hope to hit a home run, because if they pick that market share up, I mean, they could crush it over the next 5 years, 10 years. Now, again, these are all risky bets. I don't want to see anybody doing anything silly and betting on it too big or whatever else. So you guys have to do your own research and make your own decisions on this stuff and not listen to me. But if you could, like, subscribe, make some comments. Tell me what I'm wrong about. In general, I think the stock market looks super strong right now. I had a lot of people making fun of me last week and the week before, telling me how wrong I am. I love, since CPI came out, how the market's been showing that it's strong. I just don't see a bad economy like everybody else does. So have a great weekend. I'm sure I'll talk to you tomorrow and Sunday, and Thanksgiving coming up, so I'm super excited about that as well. Bye-bye.